Hello everyone and welcome to another episode of All Things Real Estate. As always, I am your host, Kyle Seyboth with Keller Williams Realty, and I am serving Massachusetts and Rhode Island commercial and residential real estate, helping out buyers, sellers, investors, every single person involved in real estate I possibly can. And today with me, as always, I have a guest. Today I have Jarred Minieri from Semper Home Loans. And Jarred, thank you so much for being on the show.
Thanks for having me, always.
So like we always do, I kind of give a brief, description of what you do and who you are and where you came from. So Jarred, you've been a lender for how long?
Going on 15 years.
15 years.
Yeah.
So lender, mortgage broker for 15 years. You've been with a couple companies here recently, right? So you've been with a few different firms that you found the right firm that you're with now.
Yeah.
Prior to moving, relocating, working in Seekonk, where were you before?
So prior to moving up to New England, I was born and raised in New Jersey.
Okay.
Yeah. I moved up here about 12 years ago, roughly.
Okay. So you've been here for 12 years.
Yeah.
And you have 2 kids?
2, yeah. I got a 6, almost 7-year-old, same age as yours,
Yep,
and
yep.
a 4-year-old.
Yep. So good. 6 and 4, same as mine. Yep. So that's a handful.
Same craziness.
That's a handful. And your office, so you were with, so prior to Semper, you were with Nations Lending?
Nations Lending, yeah.
Yep, Nations Lending. Made the move over to Semper, and your office is right in town, and you're right near the gristmill, right?
Yeah, right in the same parking lot, right on the pond there.
Yep.
Yep.
And what's that address over there?
895 Arcade.
895 Arcade, nice. So you and I probably got to know each other, I don't know, what, 4 or 5 years ago?
Yeah, probably.
4 or 5 years ago. And the one thing I always think about when I think about like how we met and what we've been doing and the stuff we've been doing in the future is that you really study kind of like the lead generation and the ability to get new clients, right?
Yeah.
The ability to nurture, get new clients, obtain new clients, and service the heck out of them.
Yep.
So I mean, I think that's something like, what have you really built your business on? Is that a protocol to where you are today?
Yeah, I mean, my business has always been referral based.
Nice.
Especially when I made the transition from New Jersey up here, for many, many years, still probably 90% of my business was still in New Jersey, New York, Connecticut, Pennsylvania.
Yeah.
So that was just because I built my business the right way, I did the right thing. We always do for our clients.
Yeah.
And it's hard to turn it off when you build a business like that.
Yeah, so referral based, like a quick example for everyone to understand what that is. So Jarred does a loan for Peter, right? Peter's aunt needs to buy a house. Peter's uncle needs to buy a house. His grandma, his friend, like those are the sort of clients that you deal with for the most part, I would say, right?
For the most part, yeah.
Right?
Yeah.
But you also kind of come up with interesting ideas on how to obtain new clients and how to help people that are renting, right?
Yes.
Get out of in a rental situation and actually move into a permanent residence, right?
Yeah, exactly. We're very big on helping first-time home buyers, get into their first home, especially around here, because the market, we see people paying, $1,500, $2,000, $2,500 in rent.
Right.
And, common thing that a lot of people tell me is like, well, I don't necessarily want to pay, if I'm talking to like a first-time buyer,
Right.
like, oh, I don't want to pay a mortgage. I'm like, well, what are you paying now?
Right.
You're paying your landlords, right?
Right. And the number's pretty close.
So I just had a customer yesterday. She's paying $2,300 a month, and in Riverside for a house, and she's buying that house for like $300-400 a month less than what she's paying in rent. Never mind the tax benefits that go with it.
Right. Tax benefits, the ability to pay down debt and increase equity, right? So all that sort of stuff. So we see that all the time, and I think what we've tried to do is you and I tried a couple years ago, and worked somewhat successfully. Is we looked at all the basically the mill buildings and all the people that are paying those sort of rent numbers.
Yeah.
And those are the folks that really don't understand or need to understand that they can get the same exact payment to own something.
Yeah.
Right? It doesn't have to be a house. It could be a condo. It could be a multifamily.
Townhouse,
It could be whatever, right? It could be whatever. So that to me is important, and it's important to educate those people so they know.
Yeah.
Like $1,700 in a mill, $1,700 a mill, I can buy a house for just as much money.
Yeah.
Right?
Yeah.
Or less, or I could save money.
Yeah, I think, I tell people once people start crossing that 1,200 barrier, getting to 15, then it starts to make sense to at least look and see where you're
Agreed.
at. Not that you can necessarily buy a house for 1,200. I mean, maybe you could, but something smaller in this area, depending. But once you start getting up to that 1,500, in that area, then it definitely it makes a lot of sense for most people to start looking at what you're doing.
Right. Would you agree that most first-time buyer homes can be afforded anywhere from $1,500 to $2,000.
Oh yeah.
Like the majority of properties in Rhode Island, not Mass.
Yeah.
Mass is a little harder, but in Rhode Island, I would say most of those properties with a monthly payment, with putting down minimal 0 to 3.5%, your mortgage should be right in that $1,500 to $2,000.
Yeah, absolutely. And Mass and Rhode Island, I mean, it's funny because when we run the numbers, because again, we're right on the border, right? Mass and Rhode Island. And, all day long we deal with people who, like us, younger people, and, they might, parents lived in Rhode Island or whatever, and now they have kids and they're starting to use the school system. So they might want to start coming into Massachusetts, for the school system. So all day long I run numbers for people between Rhode Island and Massachusetts, and surprisingly, it's not incredibly different. So and you'll probably agree, like you might pay a little bit more money in Mass. Right. But the taxes are also a little bit lower.
That's the key. That's the kind of, the handoff there, right?
Yeah.
So the taxes are going to be lower. So that's going to impact your payment much more than people understand.
So sometimes you can wind up with the same exact payment. For every $100, so what I tell people is for every $100 a month that you're paying in your payment, that's equivalent to about 20 grand.
Right.
So people say, hey, Jarred, if I just want to get a rough idea how much something costs, they say, okay, for every $100,000 that you borrow or don't borrow, however you want to look at it, use about $500 to $600 a month.
Yeah.
So somebody says, all right, if I'm looking at a $300,000 home, again, this is just a simple rule of thumb. But it'll get you within.
This is just the mortgage, though, not with the tax.
Just a mortgage, right? Now you got to factor in taxes and insurance in there.
Right.
But if you're in a town where, I don't know, let's say you're looking in Mass, let's just say, and the taxes are $2,000 a year less, right? That's equivalent to about 30, 40 grand in price.
Big change.
So if you're looking in Rhode Island, let's say at a house that's 270, 260, and then you're looking at a house in Mass for 300, you might say, oh, my payment's going to be a lot more. Well, maybe not.
Right. And you get more house, and you may get into the area that you want. Right.
Yeah.
There's a lot of different factors that are
there.
there.
Vice versa,
But I think what you just said is really important. So as a buyer, right, general rule of thumb is for every $100,000, that's how much per month?
Figure about between $500-$600 a month. Yeah.
So that's great. So $300,000 should be about $1,800, right? $1,800 in just principal and interest.
No, probably even a little bit less.
All right, so a little less, so 17, 16, whatever that looks like, and then you add in tax. So that's a good way for people to understand. Hey, I'm looking at this house. I can use a mortgage calculator. I can do all that stuff. But quick in the top of my head, I know it's going to cost.
Just quick.
I know it's going to cost this, which is good. I think a lot of people don't know that.
Yeah. I mean, it won't get you exact. It'll get you within
close, a couple $100 bucks,
enough,
which is what people need.
Yeah.
So obviously, being you're involved in town. Your kids are involved. They're in sports. I see them all the time. I see you guys out there all the time. What is your thought on? And I haven't had anyone that I've asked this. The Seekonk market specifically. Like, what's your read on from an outsider looking? Because you kind of, you were in New Jersey. You came up this way. You migrated up here. What are your thoughts on Seekonk, and what are your thoughts going forward here?
Seekonk, it's an interesting town. I've come to find as I've lived here now for about a dozen years. I think the Seekonk market in particular is strong and always going to be strong. I don't think much is going to change that.
So why? What do you think it is that drives so many people here?
I think it's a few things. I think it's community.
Yeah.
I think Seekonk seems like a very it's an older town, right?
Yeah.
You have a lot of different generations that grew up in this town. You have a lot of, just a lot of community things going on.
Yeah.
A lot of camaraderie. And, but I think the school systems are huge, obviously, right?
Yeah.
Why does everybody want to come to Seekonk? Usually from maybe a Rhode Island surrounding for the school system, right?
It's safety, schools.
Yeah. And you have everything. I mean, everything's in good proximity.
I think that's the other good part. Like whether you're in the south end, which is, past 44 out that way, or the north end, Baker's Corner. You have Attleboro, North Attleboro for the north end, Route 1. And then out here you have Route 6. So you have everything.
You have everything, yeah.
The other thing I think that people really like and what draws people here is outside of those factors, typically the lots are bigger. So you get a little more land, but they're not too big.
Yeah.
Like Rehoboth sometimes is too big for people, and Rehoboth's a little further out.
Yeah.
Right? Seekonk's a little closer to Rhode Island. It's closer to the highway. It's closer to all your kind of amenities in Route 6. So I think those are big factors. My question and problem is, do you think it's an inflated market?
Do I think it's an inflated market? That's a tough question because that's something that we're looking at like every day in our business because there's a lot of rumors swirling about, things like that, inflation and another recession on the horizon. Listen, if any of us knew that answer, we would have won the lottery last night, right? But I would say, if I were a betting man, I would say I don't think we're going to see anything like we saw back in 2008. I just don't think it'll happen.
There's no driver for that.
Yeah.
There's no catalyst to push it down like that.
No. I think with the upcoming election, I think maybe there might be some manipulation going on as far as maybe some scare tactics with the economy and all that. But I mean, you know as well as I do, right? Being an investor and owning a lot of homes. I mean, it's kind of like your 401k, right? You know, like in 2008, people's 401ks tanked.
Right.
Now, a lot of people were freaking out, right? It's like, okay, well, relax, because over time you'll gain it back plus some, and real estate is the same way.
It's unrealized gain loss.
Yeah, I mean it's camel humps, right? Every couple of years, but if you look long term, it's always trending upwards.
Correct.
So the only people that really probably could get hurt, like again, you probably feel the same way. All right, if you're buying this house to flip, or you're buying this house for a 1 or 2 year stay, all right, maybe you want to pay a little closer attention. If you're buying a house for long term, it doesn't matter. And
I say to people, I think it is inflated. My personal opinion, Seekonk's inflated.
A little bit, yeah.
A lot of it. But I think that it's inflated relative to Seekonk in the past. I don't think it's inflated relative to surrounding areas. I think it's went up with the surrounding areas.
Yeah.
Now, I think the whole market's inflated.
Right.
I think that Ray's Ranch in Seekonk on the south end that sells for $400,000.
Right.
Probably worth $350,000.
$350,000, yeah.
So there's probably about 15%, give or take, inflation number in there. But I think if you're a buyer and you have a 10+ year plan, to your point, who cares?
Right, yeah.
But if you say, my husband may get a job transfer, I may get a job transfer, we may not be able to swing this payment, and you may have to move in the next 5 years, I would be very cautious.
Yeah, then you want to be a little careful.
You need to pay attention. And say, okay, what can this value come down to, and where does that put me? Right. So those sort of things definitely, I would agree with you as factors that people need to, lock and load. Now, from your business, right, as far as being a lender, what would you say the majority? We've talked to other lenders, so we went over, first-time buyer programs, FHA, conventional, investor loans, all that sort of stuff. What's your business makeup, like percentage-wise, would you say, on those different factors and loan types?
So for me personally, I'm probably, I'd say maybe about 70-ish% conventional.
Okay, that's much different than the prior people.
Yeah, I mean, probably becoming a little more prevalent, because again, I do a lot of multifamily lending too. So we do a lot of FHA with multifamilies, a lot of first-time home buyers with multifamily lending. So I'd say right now, 25-30% or so. We also do a good amount of VA as well too. Yeah. So that's my general makeup.
So your conventional's here.
It's a little higher,
which is good, because for people that don't know, conventional is typically a little stronger buyer. Right. A little easier of a transaction. As far as like the buyer's a little more astute, typically can have their ducks in a row a little
generally,
generally speaking, right? So that's good. And I think in the areas that you focus in, Bristol County, Norfolk County, some of these other areas, those are the type of buyers. So I think for your focus areas, it makes sense. Right? We've had other folks on very heavily geared towards first-time buyers, but they focus on Pawtucket, Providence, Cranston, Warwick, all those different areas. So I think that's important. Your staff, how many people are in your staff?
So my wife is my loan partner. We have I have my processor, and we're actually hiring another loan partner probably in the next couple weeks.
Oh, so you have someone ready to go?
Yeah, hopefully.
Good for you.
Yeah, and then another one probably in the next few months.
I know you were working on that, so that's great. How do you like that office over there?
Our office space is awesome. Yeah. It's nice. I mean, it's a great spot to be in. But also just for people in the area, it's like, everyone knows where the grist mill is. So people, where's your office? You know where the grist mill is? Yeah,
we're in
right
the parking
there.
lot. Right. Before that, you were right next to Newport Creamery.
Right next to Newport Creamery. Yeah.
So you must like this a lot better.
They were both great offices. Yeah, this one's definitely a little bit better. It's laid out a little bit better.
Has more visibility for you too.
Yeah.
Right, a little more because you were kind of on the second floor. Yeah. This is like your own stand. There's no one else in there, right?
No.
It's just you. Good. So what is your outlook for 2020, as far as your business specifically?
Yeah, I mean, I think it's going to be overall a strong year. With rates where they are now, we're not at the lowest point in history, but we're not that far off.
No.
So there's, and again, that's another part of it. A lot of people are saying, is there going to be another rate drop? Are rates going to come down? It's hard to say. And I tell people, my honest opinions, I've been doing this for 15 years. I track rates every day. Nobody knows. Nobody knows. But I would say this, because I have a lot of people that are on the fence right now. Should we move now? Should we wait? What's going to happen with the market? I think there's a lot more room for rates to go up than there is to go down.
Of course.
Not only that, I think if rates do push down a little bit, it's not going to be anything significant.
No.
I don't know if we're going to break through, unless there's some kind of catastrophic event. I don't know if we're going to break through the lowest of the lows. So I don't think
and you really don't want to break through, because that means if you go there, right, rates go down when things get bad, right? Typically, rates go down to stimulate the economy, to push things up. So where we're at now, there's a more, they're trying to normalize that.
Yeah.
I think that number is going to go up.
Right.
But I think if we see a catastrophic move, that's a bad thing. And
right.
It's bad for everyone.
Well, it's like in 2008. Yeah, sure, rates came down, your 401k evaporated.
Correct.
So
and you don't have a job and you have no disposable income.
So that's kind of that's the crux with rates is everybody wants low rates, and sure you do, and you want to take advantage when you can, while you can. But in order for the economy to kind of fully recover, rates, in theory, and I won't get into all the economics of it, but they kind of have to go up.
Of course.
They have to. Because that's what's going to drive your 401k. It's going to drive your investments up as the overall economy does better.
Right.
So I tell people now, listen, you have rates in, 3s, 4s. Heck, we were almost in the 2s, on some lower term, 10, 15 year. It's like, what are you waiting for, 0?
No, exactly.
I played this game.
You're going to play the game. And I think we actually are in, from an economic standpoint, probably one of the best economies that we've seen in a really long time.
Yeah.
And unfortunately, what goes up must come down at some point, right?
And what's down is going to rebound up.
Right.
Yeah.
And what's down rebounds up. So we're at, in my opinion, the end of a 10, 12-year upswing that will plateau and eventually drop off.
I think we're going to see a little drop off,
But I don't think it'll be major.
No.
I think, this is what I predict, and I don't think I've really got this out there, but I think the next shoe to drop, there's two things where you're going to see a problem. Number one is student debt.
Yeah.
I think that's going to start to become a major factor going forward.
It already
right.
is.
But I think it's going to become more mainstream. And more folks are going to be handcuffed because of that student debt.
I think that's going to be the next kind of crisis that we work through like we did.
Millennials will just stop paying.
Yeah.
Right? They'll just rent and stop paying. They won't care. That will be a problem because these folks that are 22 to whatever that millennial age group is, when they stop, that cuts off that whole, pass the torch mentality from one age group to another. So that could be a problem. And the second thing I see is multifamily inflation of pricing with buyers that are FHA.
Yeah.
Because these buyers are on the cusp of affording these houses. A boiler goes, a roof leaks, tenants leave, economy swings, they can't afford it anymore.
Yeah.
Those two things I think will be your big drivers to actually take this market down a little bit. I think the multifamily thing may come first, but they're all going to be indicative of, I think, the presidential election.
Yeah.
What happens there is going to really drive where this thing goes.
Yeah, I hate to be like the political guy because I try to stay out of that arena.
Same here.
But if you look at what's going on, I think there might be a push to kind of force maybe some kind of recession or some kind of scare between now and the election.
I agree.
And that's what, I listen to a lot of really smart people, smarter than me in this business, and a lot of people say the same thing. We think June, July, there might start to be some pressure on the economy. Because I think it's going to be a way to, President Trump, he's out there touting we got the best economy, and that's what he's running on, right? And I think the other side, and again, I'm not taking sides here, but I think the other side is using that as a tactic to,
watch this.
Watch this. Yeah, how did your economy do?
Right, and that's a problem because people watch headlines.
Right.
People watch the news. People read the paper. So that starts becoming like headline news, June, July, August. That sets up. And if it doesn't remain status quo and the other party goes in place, that could be a major issue. Yeah. Right? Because what that brings is uncertainty.
Yep.
And public does not like uncertainty.
No.
Whether you like Trump or you don't like him or whatever, whoever you want, it's irrelevant. I don't care. I personally don't care who it is. But that uncertainty is a problem.
Right.
And that could be a driver down as well.
Yeah.
So those are all things that I think about all the time, and I'm always moving my business around to kind of compensate for that.
Yeah.
And to figure out what do I need to do to isolate my business and isolate what I do from any sort of economic downturn. And that's what I'm working on for 2020.
And that's what we're doing now. I mean, again, we don't know what one day is going to bring to the next, right? Never mind, 10 months from now, 11 months from now. So I'm telling you, we're going through all of our clients for the last 15 years, and it's like, hey, listen, you're in the market right now where your equities, it's up there, might peak, you might see it come down.
Right.
take a look at where you're at, make sure you're on safe ground. If there's better ground to get on it, now. If you have a rate that's over 4% or something, let's look at that and let's see if it makes sense to chop that down right now. Because right now you have the equity, might as well take advantage, especially people who've purchased homes over the last 1 to 3 years.
Right.
Where maybe they put a smaller down payment down, like 5%, something like that, but they've built up some equity. Maybe they had mortgage insurance. All right, let's get out of that now,
right,
while your house is still here. And this way, you're not, if the market does fall down or collapse a little bit, you're in much safer ground.
So you just actually got me thinking crazy. So is now a great time for someone to do a cash out refi?
So it depends on what you're going to use the cash for, right? So.
Right.
Yeah, probably your equity is probably in a spot where you're probably on the high side.
Right.
Right. What are you going to use the equity for is really the question.
If you have business opportunities or other, in my opinion, if I have any opportunity where I can get more than 3.5% to 4%, it makes sense.
Exactly.
Right. So that opportunity cost there is huge.
Yeah.
Right. So if I'm going to take it and put it in the bank and sit it at 0%, what am I doing?
Why do it? Yeah.
What am I doing? If I'm going to take it and reinvest it in another business or reinvest it in some other assets,
another property, whatever.
Right.
Yeah.
So this is actually interesting. So now I would say is a great time with the market here and rates here.
Market's here, rates here.
You're
never going to borrow money.
There's probably never a better time to cash out refinance.
Yeah, you're not going to, I don't think you can really say that you're going to borrow money at a cheaper rate. I've seen this for the last 15 years, rates, because rates have been ping-ponging a little bit over the last few years. I see, the last time rates were in the, 4s and 3s. People are like, I'm going to wait for it to go down. I'm like, when is that? Right. And then, rates went to 5, and it's like, and that's the thing with rates. I tell people ask me all day long, Jarred, is it a good time to lock? Should we float our rate? I tell people, listen, if it makes sense, just do it.
Just do it.
Just do it, because you're not going to know what's going to happen tomorrow. And the only time you know when rates hit the bottom is after they've gone up and you've lost out.
Exactly. and no one is smart enough. I don't care what you say. No one can time that thing.
No.
You'll never time it at the total bottom and the total top. It's just like the stock market.
There's probably very few people in this world that know when rates are going to go up or down. It's not me or you.
Oh, exactly. And definitely not anybody else
anybody
watching
we know,
or listening. Yeah. So definitely, I agree with that. So good. So you think 2020 better year for at least the first half of the year, and then all bets are off if they start, manipulation with the economy and that sort of stuff. Who knows? I agree. I think demand will be up. I think supply will be up slightly. Excuse me. I think supply will be up slightly. I think that prices have plateaued, so I think pricing will stay somewhat status quo, which will all lead to a somewhat healthy housing market, which is what we look for. I think refis for you guys, you had a refi boom again. I don't think you'll see it again next year. I think, if rates stay where they are or they go up a little bit, you won't see that much refis. But I would say I would agree with all your analysis on next year. Yeah. And I think that's what we're going to look for. So basically, at the end of the day, I think good season next year. You're getting ready, I'm sure, for the holidays. You guys staying local? You guys going anywhere?
Heading down to New Jersey for a couple days.
Nice.
And we're back here. Yeah.
Kids must be excited.
Yeah.
Yeah, that's good.
How about you?
Good, all good. Stay local. My kids love it.
Yeah.
They're awesome. They're ready to go.
Yeah.
They can't wait. Santa's coming.
That's it.
So the gifts will be here. So with that, I just want to say thank you so much for coming on. This was great. And hopefully everybody watching, listening, whatever, tunes in and has any questions, they can reach out to me at any time. Thank you so much.
Thank you.
Appreciate it.
All right,
yes, sir.
Pleasure.